Hello and welcome to the Gold and Silver Club Weekly Commodities Review presented by myself, Phil Carr and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover a end of week summary for the metals, energies and agriculture. We'll look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll also look at the week ahead, so key events looking forward, and we'll be answering any questions you might have. Okay, so gold has held steady on weaker than expected economic data this week. Gold prices held steady on Friday after trading near 1-month highs on Thursday following disappointing U.S. economic data and concerns over growth in the Eurozone countries. Gold price strengthened on Thursday as the U.S. Labor Department reported the number of individuals filing for initial jobless benefits in the week ending August 9th increased by 21,000 to 311,000 from the previous week's total of 290,000. Prices of the precious metal were also lifted following a release of unimpressive U.S. retail sales figures, which pointed to a slight deceleration from the pace of retail spending reported in the previous month. The disappointing data prompted traders to trim bets that the Federal Reserve will begin raising rates in the first half of next year, driving capital out of the US dollar and into gold. Elsewhere, concerns over economic growth in the Eurozone also supported demand for gold as a safe haven after data on Thursday showed the bloc's economy failed to grow in the second quarter of the year. GDP in Germany and France, the two largest EU countries, was disappointing. Meanwhile, the EU Consumer Price Index fell 0.7% in July from June, whilst the CPI report added to ongoing worries regarding price deflation in the EU. This was on the back of reports earlier in the week indicating that Italy's economy slipped back into recession during the first part of 2014. Gold is often seen as a safe haven in times of economic uncertainty. Should the situation in the Eurozone continue to raise concerns, gold could be one of the biggest beneficiaries in the short term. We shall take a look at the technicals very shortly. Before we do so, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial television. So we'll just take a look at the price of gold at the moment. We're currently trading at $1,294 per ounce. We'll take a look at the technicals very shortly. Before we do so, we'll just go through some of the top trades of this week using the Gold and Silver Club signature trading strategies. So first of all, this week we had a lovely swing trade position from last week on Palladium, which came and delivered right up to the resistance channel here. We had a risk on that of 100 points, so $1,000 US risk for each lot, traded for $3,600 profit for a 3.5 to 1 risk to reward. On wheat this week we also had a nice sell short opportunity. The risk on the trade was 75 points and the profit was $1,500, so 150 points profit for a 2 to 1 for a sell short this week. And we've also had a lovely trade opportunity yesterday on natural gas on the storage inventories. We had a breakout. The risk on that trade was 30 points, so $300 risk for a profit of 120 points, $1,200 profit for a 4 to 1 natural gas storage inventories. A fantastic announcement you can trade every single Thursday on the commodities. So what we'll do now, we'll take a look at the live markets at the moment, how they're shaping up as we come into the afternoon session here for the US. So first of all, I'd just like to take a look at Palladium. Palladium has had a fantastic run the last week or so. Also Palladium is one of the top performing commodities now over the last 5 years and one of the top performing commodities of 2014. So we have broken out and we're retesting up into that key zone again, the 13-year highs here, right at the 888 zone. We just came up and retested that today. We've got a nice V-shaped reversal pattern here as well. So what we're looking at here is a potential breakout here for Palladium. It's the third test of this resistance channel. We've got a very clear trend channel on Palladium, extremely clear. Every time we come down to the low end of this trend channel, it does provide us with a lovely buy opportunity, and when we come up to resistance, we often have an opportunity to take profits and then sell short again. So Palladium looking strong here, looking for a break above the 888 level at the moment. Platinum on the weekly, we've actually come all the way back down to test the lower end of the trend channel just today. We'll see if that holds. Obviously, Palladium has been a top performing market so far this year. Platinum not as strong, however this trend line, if it holds, could provide some very strong value buys at the moment. We could really see a good opportunity for a swing trade if we were to hold around the current levels. Now gold this afternoon, we did get a bit of a pullback today, right round to the 1295 zone a little bit earlier today. What you'll notice on gold and what you want to draw in is a trend channel going back to the beginning of June. You'll find where the price is actually bounced off today, it's right at the lower end of the trend channel. If you take the resistance and you also connect these resistance lines, you'll see that we've got a pennant forming on gold, and usually what you tend to find in a pennant is we will break out within the predominant trend here, and the predominant trend at the moment is to the upside at the moment. So we would be looking for, I would look at this zone at the moment for potential buy opportunities. If we break it right down into tighter time frames here, you can see there is a little bit of a hammer started to form right at this trend line at the moment. So we'll be looking out this afternoon to see whether this trend line will hold, whether we'll get a bounce. Here's the pennant that's forming at the moment on gold. As we come into the Friday close later on this afternoon, we've got several hours left. We'll be very curious to see whether gold will break through the 1290s and get a sell-off, or whether we can hold on to the 1295 level and get back above the 1300s into the Friday close. That will be very important as we go into next week for gold, because if we do hold here, seasonality bias and geopolitical tensions would suggest that we could get some support and some good buying as we go into next week here. So we'll be looking out for that. Silver did break down a little bit earlier on this afternoon as well. You can see it's actually broken through this supportive line here at the 1974 level. We have come down to a major level of support just circa around the 1950 levels, a nice round number there. $19.50 an ounce. So we've sold off. We seem to have reached the max in terms of the daily volatility today for silver. We have had quite a strong downward trending channel for silver. There's been opportunities just to sell short every time we've come up to the upper end of this trend channel. Silver much weaker than gold and palladium at the moment. They're really the star metals so far this year. Also, if we just take a look at some of the, we'll take a look at the softs here, the grains. You can see actually corn having a good move today. Actually, we've come up to the upper end of this trend channel. 370, the next key level for us to break above. We have broken above just the weekly resistance line here, which was at the 365 level. Getting a bit of a breakout here to the upside. Wheat actually selling off right now, so we're seeing a bit of downward pressure on wheat. Looking at the daily there, got a big inverse hammer developing right at resistance again at the 543 level. There's a downward trending channel on wheat. Wheat and corn very strongly correlated. We'll see if this is a short-lived move here on corn and whether we reverse and we just get a continuation of the downward trend, or whether it can break out of this trend channel we're in at the moment on corn. So that will be very interesting to see how it closes today and what sort of a setup we have as we go into next week. If we take a look at the energies here, natural gas, we got a nice little lift yesterday on the inventories. We've subsequently sold off today, broken through yesterday's lows. Actually, we're down to about the weekly lows at the moment. Would like to see how natural gas is going to close today. We do seem to be forming a V-shaped reversal pattern. If you look at wheat, there's been a similar pattern here, a V-shaped reversal on the daily here as well. Very similar pattern starting to work its way out with natural gas. If natural gas breaks below the 3.728 level, that will be particularly bearish for natural gas here. We could see some breakdowns lower. We'll keep an eye on how this does close today. We've almost got a railroad here on the daily, so on the weekly as well. We'll keep an eye on that on natural gas as we come into the close later on Friday. Looking over at crude oil did break through major support earlier on today and yesterday as well. We got a break through the 95 level here for crude oil. This is looking at light sweet crude oil. We got a break and we've moved down circa about $1.50. We're finding a little bit of support, but it's quite overextended at the moment. So we'll see whether we get a little bit of support around the 94 zone, but 95.85 has broken down. You can see there's quite a strong downward trending channel here on the October contract. We could be due more downside here as we go into next week. We're continuing to see pressure on oil. And finally, copper as well. Copper has come down to a major support zone. It's sold off quite substantially over the last week. You see this nice inverse hammer developed on Monday, sold off, got a break below 3.51 support. We've come all the way down, back down to the previous resistance here at 3.07, 3.076 here. You can see that was the previous area that we broke out from, and now we've come down and found support. So that will be an important level for copper to hold as well. So looking very interesting here, particularly on gold, palladium, which is very close to a breakout, and also gold. You do want to watch gold today. We'll be very curious to see whether we can hold on to the 1290 zone here and get a bullish move as we go into next week, or whether we break down. So gold, definitely one you want to watch as we come into next week here as well, and watch it on the close today. Note the US dollar index is selling off at the moment. There's some downward pressure on the US dollar index. Normally that is inversely correlated to gold, so we may see a delayed reaction, and we may see gold supported a little bit later on in the day here. So do keep an eye out for that. Make sure also you're aware of the news announcements which are coming up next week. So these are as follows. The week ahead, the key events looking forward are Monday the 18th of August at 4 p.m. Central Africa time, 10 a.m. Eastern time. We have the National Association of Home Builders. So the housing market index rates the relative level of current and future single-family home sales. A reading above 50 indicates a positive outlook on home sales, whilst below indicates a negative outlook. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. We then have on Tuesday the 19th of August at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US core CPI. The core consumer price index measures the changes in the price of goods and services excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then Wednesday the 20th of August at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms do report those inventory levels to the Energy Information Administration on a weekly basis, so a higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish, which will definitely affect the energies and crude oil next week on Wednesday. On Thursday the 21st of August at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. This is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Next Thursday, the 21st of August at 4 p.m. Central Africa time, 10 a.m. Eastern time, we have the Philadelphia Fed Manufacturing Index. The Philadelphia Federal Reserve Manufacturing Index rates the relative level of general business conditions in Philadelphia. A level above 0 on the index indicates improving conditions, below indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then Thursday, 21st of August at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage inventories. That's very important for your natural gas trades. We often get a lovely trade set up just prior and after the natural gas storage inventories. So the Energy Information Administration, they provide the natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. And of course, for those of you who'd really like to take your trading to the next level, you can find out how to trade various announcements with us live, including non-farm payroll, including the FOMC, how to trade natural gas storage inventories, how to trade oil inventories. We cover this all as part of the Gold and Silver Club. You can find out more actually about our live trading calls, also our live training room program, and our upcoming courses. Very simply go to www.jointhegoldandsilverclub.com. You can contact us at our Johannesburg office as well. Just telephone +27 11 083 8403 and do get in touch with us to find out about our upcoming courses and live trading room program. Also, make sure you subscribe to our newsletter at www.thegoldandsilverclub.com. You'll receive free weekly reports on the precious metals, energies and agriculture, as well as live market analysis and prices. So what I'll do, I'll leave these details on the screen for you to get in touch. That is the end of today's session, so we wish you good trading for the rest of today and of course for next week also, and we look forward to hear from those of you who are interested in taking this really to the next level. Okay, take care everyone, have a great weekend and we shall see you on the next one. Cheers, bye bye.